A very good morning, listeners. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 24th September 2020 in the international market. The upcoming US elections have started jittering the markets. Yesterday, Dow Jones is down again 1.94 percentage points and almost 9.4% down from recent September highs. Similarly, Nasdaq, a tech index, was also down by 3 percentage points, and from its recent September highs, it is down by 11.8 percentage points. The major reason for this fall can be attributed to elevated equity valuations, delay in US fiscal stimulus, and resurgence of COVID-19 cases in Europe and parts of the US. Senior officials at the US Central Bank used speeches on Wednesday to call for additional stimulus as well. Waiting for the additional stimulus, the US 10-year benchmark was once again unchanged and closed at 0.68 percentage points. The US 10-year range looks like 0.66 to 0.70. We have weekly jobless claims set for release Thursday morning along with the new home sales numbers. In the crude oil market, Energy Information Administration (EIA) for the week to September 18 reported an oil inventory draw of 1.6 million barrels versus a draw of 4.4 million barrels for the previous week. With much lower draw of oil than the previous week, crude is now trading at $41.37 per barrel. We expect the crude to be range bound with a range of $40 to $43 per barrel. In the currency market, dollar index is trading strong at 94.30 with a range of 93.85 to 94.46 in the near future. USD CNY or Chinese yuan is back to 6.81 from recent 675 peak. USD INR or Indian rupee closed yesterday at 73.52. Rupee failed to breach a strong resistance at 73.70 by making a high of 73.65, just 5 paisa shy from 73.70 yesterday. We strongly expect the 73.70 level to be breached soon, maybe today. We expect the USD INR to be range bound in the range of 73.30 to 73.70. If we talk about the domestic market, bond market is looking at the two key events. Number one, the second half borrowing calendar expected on Monday, and number two, RBI MPC policy scheduled on 1st October. As far as the borrowing calendar is concerned, the consensus view in the market is government's borrowing calendar will be unchanged but will resort to more borrowing at the end of the fiscal year once the tax revenue picture is clear. Some market participants are also of the view that RBI could announce a calendar for OMO purchases in an attempt to restore part of the surplus liquidity which has depleted due to outflow of advance tax payments and reversal of close to 1 lakh crore of funds through recent term repo operations. Can we do the all possible scenario analysis? Yes, we can. Scenario number one, if the RBI does not increases the borrowing plan immediately and if they also give the OMO calendar, this will be a true catalyst for another rally in the bond market. Scenario number two, if RBI does not increases the borrowing plan and no OMO calendar, markets will be more or less range bound. Scenario number three, if RBI increases the borrowing plan and simultaneously gives the OMO calendar as well, markets will adjust to this new reality and yields will adjust for one-time increase and settle down. Scenario number 4, if RBI increases the borrowing plan and does not give the OMO calendar immediately, yields can rise up to 6.25 levels as well. Our night research advice would be to take your bets off when the odds are not in your favor and when the outcome is uncertain. If the market rally comes, you may miss the 30% of the rally, but it is safe to miss the partial rally. At this junction, if the yields increases drastically, IDR or provisioning is something which none of the banks want in today's uncertain scenarios. Reminder, buckle up for today's 6:45 GS 2029 OMO. Night research will be available with OMO cutoff expectations by 10:30 AM today. If you need the cutoff expectations or the trading ranges, you may reach out to us on 9930307466 or research@nightfintech.com.